Well, hello traders and investors. LA here bringing you the Neoclassical Daily Wrap. We take a look at these markets, doing it from a neoclassical perspective. That is, we're looking at supply and demand. We're looking at it on the chart. We're getting high probability trades off of that. We're keeping ourselves out of trouble when they're not there. I do a show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's on our channel little. If you want to subscribe, reach on the right-hand corner. Do so anytime I push public content. You'll get a notification. If you're interested in the site and what I do, you might shoot me an email and I can explain more to you. We actually just launched a chart game. Over here, chart game gives you the ability to trade neoclassically in a game format. You can create charts. It pops the charts up. Gives you the ability to trade neoclassically. You don't know what time frame it is, you don't know what the stock is, but you do know what you're looking at. And by that I mean you know what the chart markup is, and if you know the neoclassical principles, you can use those to trade these charts and trade them profitably and hone your skills. It's all available here to members at TA Today, and the membership community continues to grow. If we look at the indexes, if we look at what happened today, you actually had losses across the board. Not huge, but losses, and it's going to continue, in my opinion. I'll show you why here in a minute. Russell down 1%, S&P down a little over 0.5%, NDX 0.8. Move on down to the Dow, it was the least of 0.3. NASDAQ broad composite 0.82. You had gold and silver still down on that. The only thing that went up was bonds, and bonds have been rallying, but you know, if you look over to the junk sector, I don't see those rallying. Dollar up again. That is probably the highest level it's been in quite a while. So overall, over in Europe, a little bit of losses. Europe, I just took a close look at those earlier. They're going to go down tomorrow. I suspect we're going to do the same, and if we pull over to take a look at the charts, I can show you why I believe that's the case. Looking at the S&P 500 first, what we're going to see here is bearish engulfings. So in other words, well, I shouldn't say it's a bearish engulfing. You know, bearish engulfing says that the body of this candle is dark and it covers the body of the other candle. Well, here you didn't actually cover it. What you have here in my language, something that I created, is called a takeaway bar. So you take away everything that happened on the good the day before, you take it away and you replace it with something bad, or vice versa. In this case, it's the bad case. And what does it do? Brings you right back into the range. I've been talking about this range for a while. I said to members on Sunday that we'd probably get a nominal new high, Sunday morning, matter of fact, that we'd probably see a nominal new high, and then they would reel it back in, and that's kind of what they're doing. If you look at it on a weekly, I mean, it's early in the week so far, but you have the potential for the same sort of thing. And if you have a bad week, you have the potential for bearish engulfing on the weekly, and that would be the first time we've seen that kind of a signal in a while. If I go to the NASDAQ, the composite, the broad NASDAQ composite, there I see the same thing, takeaway bars right here. If I move to the NDX, I'm going to see the same thing on the NDX. Takeaway bar, in this case almost a bearish engulfing. And finally, if I move to the Russell tried to get up. Remember yesterday the Russell tried to rally, gave it all up today, and comes right back down into the range. Moving over to the sectors, this is where you're going to really see it. And when I looked at Europe earlier, in particular I was looking at Switzerland, they showed this everywhere I looked, and that was almost all the sectors were bearish engulfings. You can see it here, bearish engulfing, right? You can see it on all these charts as you go through. That's the SOX. If we go to the basic materials, if we look at the financials, so that's a takeaway bar there. If we look at the financials, it was a takeaway bar. If we look at the industrials also had a takeaway bar. If you move to the technology, which is what started it today, you got a bearish engulfing takeaway bar. Consumer durables, remember these got hammered. They also have a bearish engulfing. The only thing that held up today, healthcare, and that was because biotech was up so strong. But if you look at biotech, you had a blow off in volume. You blew out all the shorts that have been shorting this thing, but yet you're coming right back down into the range on the weekly, most likely, and that's still going to be a failed breakout if that happens. Finally, looking at the discretionary, Amazon got these guys up and going earlier. Put that back. And today, a takeaway bar in force. I talked about this earlier. I think I talked to members, not so much here. And I told them that I didn't like the way this acted. You know, in other words, Amazon got that big spike up. And it may have been here I said it. Amazon got the big spike up, yet they couldn't hold price. So they announced the takeover on Friday, but they couldn't actually take this index higher. It was a net takeaway, right? Everything Amazon got, everybody else gave up. And if you look at Amazon, it actually gave it up as well. If you move over, you've got some earnings that are starting to come out, kind of the early stuff that comes out after the primary earnings season ends. Adobe tonight, this is a technology stock widely watched because they're heavy in the web on the repayment schedule type services. Adobe comes out that shows really good earnings. This stock is going to try and break out tomorrow. The key is going to be this bar. If you want to know what technology is doing, if you want to know if the next earnings season is going to take this higher, if you want to see that, what you want to do is you want to look at this ABCD structure, which should take you right to there. It should fail there most likely and come back in. If it does that, technology is still not the go-to trade in my opinion. Moving over quickly to look at the currencies. I was talking about the dollar. Let's take a quick look at the dollar and see what it looks like. I haven't watched it in a while. And what do we got here? So the dollar is over a swing point high, does a little retrace, doing an ABCD up. And that could get you up into these swing point lows potentially around 25. Looks like about 25.35, 25.40. This is just a bounce out of this retest regenerate. Your retest regenerate is here, and these are the things that you would use that trading game for, right? Is to line these things up. If you know the principles, you can see where the trades are, and you can make those trades in a safe setting so you don't lose money and actually learn from it. FXE, if we look at it, it should be the opposite, and under swing point low, that's an ABCD down as well. So at least they're in concert. It looks like the currency is going to continue a little bit higher, and that's going to put pressure on gold still, and also on this market it looks like is going to have a tough time with it too. Let me go look at the debt structure. I was looking at this intraday today, so debt instruments. The thing that I noticed that the bond is really getting a move, right? Now if the bonds are moving higher, that's bringing yield lower. If the yield's going lower and the Fed says it's going to tighten more, something doesn't line up, right? And so we look here, here's your big bar down. The test on this one is still a ways to go, right? You got to go all the way up to here to finally get that test, and then eventually into your bearish retest regenerate. So this is the area it's targeting. That's where it's trying to get. But the fact that it won't give it up, whereas you know it should, right, tells you something's going on. You got a little ABCD structure it's going to complete. It's probably going to set up another one to get up to that level before it gets there. But what I was looking at today is I was looking at other bonds. I was looking at municipals, still holding, right? Looking at junk bonds. And now junk bonds are actually starting to try to give it up. Treasury's going up, junk bonds going down. Okay, that's interesting. So how about high quality junk bonds? What are they doing? If we look at those, they're holding up. So the investment grade, the apples of the world, still holding up. But the stuff that's not apples of the world, not doing as well. And the stuff in between, also not doing very well. It tells me people are getting a little bit more concerned about how this economy is going to act over the next 6 to 8 months. Because usually this market is looking 6 to 8 months down the road. That's it for tonight. I'm LA. This is and was your daily NeoTA wrap. You have a great night. I'll see you next time. Good night.